Futures and options on futures trading involve substantial risk and is not a suitable investment for all types of investors. Past results are not necessarily indicative of future results. When I use the word I in this video, it refers to what I teach in my charting course or what I author in my twice daily oral and written updates. Prices shown on charts and quote boards are in real time and take into account all known activity up to this point in time. And if you'd like to read more of this disclaimer, simply hit the pause key on your video player.
Good weekend, all. Ira Epstein of Linn Associates with your weekend edition of your agriculture update. And this is for Friday, the 1st of February, 2019. Well, what a week it is. First of all, the government's reopened. With the government reopening, we're starting to get both commitment of trader reports. We're going to get all the government reports on the grains. Everything's starting to fill back in. Yes, we know that come February, 15th, it can all fail again, depending on how the president handles, I'm guessing, his border wall issue. That's going to be the biggest issue of all. He already said he's got something in store for us all in the State of the Union on February 5th. Our guess is he's going to declare a national emergency that'll go right into the courts over the border wall. But in the meantime, China's buying more soybeans, and we saw the market up on that news. In fact, it was up big yesterday. There was just no traders around. Yes, electronics go on everywhere. I know that. But the Chicago people that move the markets, a lot of them, just couldn't come into the office for 2 days. You can try it if you want to go out in 50 below zero wind chill. I welcome that. Even without it, you're 22 to 26 below zero, regular air temperature, people weren't going out. Now they're out, and we're going to be 50 or so on Monday. In any case, the idea here is state-owned grain companies in China are again buying soybeans. We really need the commercials there to be able to buy more than the state-owned. We need regular purchases, not, gee, we'll buy 5 million here, we'll buy 5 million there. Don't get me wrong, 5 million's a nice number. It's not earth-shattering, though, considering where we were. The good news is farmers are getting payments from the USDA again. The bad news is they got to make a decision. What do they do come planting season? And I know that you'll say, Ira, what are you talking about? It's Feb 1st. They start going in the fields in different parts of the country another 4 weeks from now. Keep that in the back of your mind. When you look at this market on a monthly basis, the resistance, I think, is pretty clear at 939.5. That is the monthly, the 18-month moving average of closes. That's the one I use there. Now, when I look at the weekly bar chart with Fibonacci studies, you've gone from 1071 to 810.5. I label these areas in these red. This is called a box, and that's called a box. A 38% retracement is the first resistance, typically from a high to a low. You got there, you bounced, fell down, came back, bounced back. You haven't yet made it to the 50% area. Look where that 50 is, the 940 zone. We're also talking the 18-month moving average at 939.5. So I have a confluence of resistance points. Doesn't mean you can't go higher, but we're in a resistance area. That is the thing to understand. You've also got a market that's been in an uptrend, higher lows, higher highs. It's certainly rallied nicely. It's given back, made back for the farmers about $1 a bushel since September. That's good, not bad. When you look at resistance, one other resistance area that ties in with my other numbers is the 100-week moving average of closes at 944, and you're at the upper Bollinger Band at 933.5. In other words, from this point to that 944, you got a lot of reasons to have resistance. That does not mean you're going bearish. Resistance is not bearish. Resistance is just that word, resistance. The market's got upside momentum. The bias is up because you're over the 18-week average, and you're in the resistance zones in an uptrend. The meal market's a very different looking chart than soybeans. If you can, just make your eye focus on the black dashed lines, which are the Bollinger Bands. Bollinger Bands tend to go sideways. The longer they go sideways, the bigger the eventual move out of them. Think of this as a pipe, and inside of the pipe, price is bouncing up and down like a spring, back and forth, winding itself to burst out in one way or the other. At this point, if it takes out the 304 area, right, in fact, let me give you this number. It's 306.90. I had it wrong. It then calls for a move to the 304. If the market can get out of here and stay up and above the upper Bollinger Band, which you only do 5% of the time. It starts saying that maybe we can get up to the 326 zone, the 100-week average of closes. So I'm going to label this market as momentum sort of flat right here. The bias is up because you're over the 18-week average, and the trend is up so far. Soybean oil got ahead of itself, got over that upper Bollinger Band, did it, I believe, last week. If you'll take a look at the close at 30.03, it was over 29.73, and this week the market came falling back, got within the band, closed under the 29.96. Remember, only 5% of the time do you stay over it, but to get a trend going, you've got to start pushing the band out. And what this market did is it took this sideways action, and this is just the kind of action you want. Yes, the market, you could say, is got ahead of itself, but it's still looking bullish. It's got the pattern of higher lows, higher highs, supports all the way back at 28.44. In the corn market, I have a market that's got divergence. Why? I've got lower highs, lower lows, bearish. It's nullified because you're over the 18-week average, which gives it upside bias, and momentum is turning down. I'll call this chart 1. It's got to do a lot more work to tell me what it's going to do. In the wheat market, we're knocking on the door of topside resistance. You're in an uptrend, higher lows, higher highs. Momentum is still up, bias is up. Resistance comes in at 529.25. This week we got up to 526.5, so we're not quite there. Last week we got up to that resistance. Resistance is still there, but you can see the sideways action. The longer we go sideways, I'm like a kid. I start jumping up and down because eventually you get a big breakout out of that. In the cocoa market, we are still in a downtrend. You have lower highs, lower lows. Now, I would throw that idea out. If this week's high of 23.04 is taken out next week or the week after, be it a daily chart or a weekly chart, a bear trap gets set up when you have an outside day down and you take out the high of that. I said day, but it's week. It could be a day or a weekly chart. Then I would look for resistance back at the closest of a key moving average. They're all under the market, or the upper Bollinger Band. In this case, until that's taken out, I think the pros are selling at 22.21. First support 21.71, and then if it lets go, watch out, because your Bollinger Band's in play then. In the sugar market, you have a market that is caught trying to develop a trend to the upside, and it just doesn't seem to be able to get any traction. You have the higher lows, the higher highs. It's unable to stay over that 18-week average. If it gets under 1237 on the weekly chart, it starts pointing back down to the lower Bollinger Band. If you can close over this 18-week average and get up and over that, well, then you put into play the 1338 100-week average. Coffee keeps having troubles getting over the 18-week average of closes. I know so many people that want to be bullish coffee, and it keeps whipping them back and forth here. You've had the pattern of higher lows, higher highs, but you keep running into this resistance, and on the daily charts, the resistance is proven to be the upper Bollinger Band. In the cotton market, you've got a higher high and a lower low. No trend. Momentum is flat. Tried to turn up, not doing a very good job. Price action sort of flat here. Resistance in these two levels, not going anywhere. Cattle market. The low of this week was 124.72, just shy of 124.70 last week's low. If you take out last week's low, you got to be careful that you develop then a pattern of lower highs, lower lows. For the first time in a heck of a long time, that could be short-term, saying that the market wants to give a pullback and a bias that is up. So I'd be watching that. Momentum is still up as well. The hog market is still bearish. Lower highs, lower lows. And I realize a lot of traders want to see China buying pork and so on. I'm going to repeat what I said before. That could happen. But when we had mad cow disease in the U.S., I don't care where you were importing beef from, nobody wanted it. That was the big problem. Well, it's not different in China. You know, you keep hearing these outbreaks of the flu there, and people walk away from it. So you still have an overall bearish trend market unless you can get back over 64.22.5. Potential could be as low as the 50-100 zone. You know, I talk this, and I talk a heck of a lot more in my morning subscriber video. Now, here's why. I realize we have big viewership on these, and I love that. The real meat of what I'm able to do, though, is in a private video that you need a user ID and password, because I say buy here, sell there. All I'm allowed to do in these videos is give an idea of what the chart action looks like. You're not going to hear me say, you should buy here, you should sell there. I do that in my morning subscriber video. It is there that I'll throw out day trade ideas to you. I'm going to cover the markets in a certain sequence every time so that if you want to trade, say, grains, why do you have to listen to stock indices, foreign currencies? Just drag the bottom, pull it where you want. If you're a financial person, what are you listening to my talk on meats and grains? Skip over it. Instead of doing a whole series of videos, I'm able to do one. I cover 40 charts, and believe me, I will throw out plenty of ideas your way because I'll give you what my 50 years in this business is. Yeah, this is my 50th year. I became registered in 1969, so it's right here. I'm going to tell you the chart action. I'm going to tell you what I see the pros doing backwards and forwards, technical and fundamental analysis for the day, and I throw out specific trade ideas. I update them for you. So a lot of people just like these videos because they want somebody to bounce an idea off of. That's how I traded. I still do. I still subscribe to different services. There's ones I want to know what they're saying. Well, you might want to. I make it very affordable. For the first 30 days, you're getting these videos, $7.95. After that, $15. All you need to do is go to our website at www.iraepstein.com, or you can call us at 866-973-2077. If you go to our website under the word research or education, you'll see morning subscriber video. Just click on it. It explains itself. I'm Ira Epstein. Have a good day.